Right, it's now over to Cobie because he has the details on the Catalyst Property Fund. That's what we're focusing on tonight.
Thanks very much, Eleni. I mean, they say the proof's in the pudding and you've got to eat it. And this is how Jamie has put together his the Catalyst Global Property Fund. If you have a look at your screen over there, you'll see the formation date there is November 2007. Fund size at $144 million US. The objective here is the UBS Global Real Estate Investors Index. In a discussion with Jamie, they feel that potentially this benchmark is a fairly harsh benchmark to try and achieve, predominantly because the fund leaks dividend withholding tax, whereas the benchmark doesn't. But there are some benchmarks that they could potentially utilize that could potentially make up for this. And that's maybe something and a change that they might make with the fund in years to come. Total expense ratio there at 1.72%. Let me just quickly give you an indication of returns there. Last 12 months, 3.7 versus a benchmark of 4.7. 3 years, 25.4 versus 26.6. These are all obviously in US dollar terms and not in South African rand terms. And over 50 months, which is the total investment period for this fund, total return there of 2.1% per annum versus a benchmark of minus 1.9%. There's a portfolio structure that you can see. And you can see what that predominantly looks like. The major overweight there, obviously, being the rest of Asia, being at 17%, and the benchmark sitting at 12%. That's one of the big ones. Europe, obviously, also being, because of the yields there, obviously being an overweight as well for the fund. Jamie, maybe just a quick question for you. Let's just maybe pause here. A quick question for you. Tell me, how do you get exposure to the rest of Asia? It's predominantly China.
Yeah, look, the benchmark that we follow is the Investors Index, so it focuses on companies that own passive investment portfolios. They do have some development around that, but the majority of the income comes from the investment portfolio. China is generally more a development game. There are certain Singapore and Hong Kong counters that have some exposure to China. A company like Capital Malls Asia, which is actually an off-benchmark bet for us, is rolling out huge retail malls across China. They've got some malls that they've developed in Shanghai and Beijing, and they generally do it in JVs with local partners. But to be honest, in our index, there's not a lot of exposure to China because it's more a development market. But we do pick up some exposure through Capital Malls Asia and one or two other counters.
Let's maybe just quickly look at the chart we always look at, and those are the rolling returns for the Catalyst Global Property Fund. You'll see the rolling returns, that's on a rolling 12-month basis relative to the benchmark over time. You can see some serious outperformance at the beginning portions of the fund, and then obviously as time kind of progresses, the outperformance kind of lingers. Here's the UBS Global Property Index. So you can see how that kind of has fared over time.
Okay, so Jamie, let's just delve into some of the way that the performances that we've actually seen. It seems that from a performance perspective, North America accounting for around 50% of the actual portfolio. Give us an indication of this number that we're actually seeing, given the fact that in your benchmark it's around 61, so you're slightly underweight, as you mentioned a little earlier. Europe, it seems that you're basically on par. And the rest of Asia, slightly overweight. Are you going to be rebalancing these numbers going forward?
No, I think we, barring market movement and company information or macroeconomic data that comes out, we're pretty comfortable with where we are at the moment. As you said, we're pretty much underweight North America. We think North America's run a little bit too hard potentially. And overweight Asia, we see nice value.
But this is relative to your benchmark, though, Jamie, because you're actually you're underweight relative to your benchmark. But I mean, 50% allocation is still quite a big number.
Still, correct. I mean, we still see value in North America. We just see more value in Asia. So it's, from a regional and stock picking point of view, it's all relative. You're looking at stocks and regions relative to one another.
Yeah, I mean, Jamie, if I just have a look again at your kind of rolling returns through time, there's certainly, I mean, as the market kind of cools down, you show that you can outperform the index, and that's obviously in good times. But when it becomes tough to outperform this benchmark, is obviously at the moment. Is there a reason why you guys are battling against the benchmark at the moment?
Yeah, I think that the last 2 years, North America has outperformed quite a bit, and we have been predominantly underweight there. overweight Asia hurt us quite a lot last year. On the flip side to that, we actually had some really nice stock calls in North America last year. Simon Property Group, Public Storage, Healthcare REIT, some quality names that performed well for us. But I mean, we look at it as a long-term investment horizon. So we're looking at counters, you know, our valuation methods are 5-year discounted cash flow. So we're looking at them over a 5-year period, and there will be periods when you underperform, but what we're looking to do is in the long term outperform. And I think we probably have a bias more towards quality portfolios, management and balance sheets. And in some of the higher beta times, which we've had over the last 2-3 years, sometimes we can underperform.
Fantastic. We have to leave it there.
On the risk of some of those high beta companies.